Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world, and today we're looking at American Strategic Investment Co. Their latest report really tells a story about a company facing some tough times with its properties and loans. So, American Strategic Investment Co, as they call themselves, ISI, is a company that deals with real estate. Now, this report details some significant events that happened recently, particularly related to a large loan and a property in New York City. Let's dive into what's going on. One of their subsidiaries, ARC NYC 1140SX, had a problem with a $99 million loan. This loan was tied to a specific property, the one at 1140 Avenue of the Americas in New York City. Think of it as a big building that the company uses to do its business. The company that lent them the money, Ladder Capital Finance ILLC, basically said, hey, you're not meeting your obligations, and started a legal process to take back the property. This legal fight is called a foreclosure action. The lender filed a complaint and asked the court to appoint someone to manage the property and eventually sell it to get their money back. Now, instead of letting that play out in court, the company and the lender decided to reach an agreement. This is called a settlement agreement. It's like saying, okay, we don't want to fight this anymore. Let's figure out a way to resolve this short of a full court battle. Under this settlement, American Strategic Investment Company agreed to cooperate with the lender. They agreed to let a receiver be appointed. A receiver is basically a neutral third party that the court puts in charge of a property when there's a dispute to manage it and ensure it's properly handled. They also agreed to let the court enter a judgment of foreclosure and sale. This means they're consenting to the property being sold, likely through a public auction. The really important part of this settlement is what happens after the property is sold. Once that sale is finalized, the company and its subsidiary are released from their obligations under the original loan agreement. This means they won't owe anything more on that $99 million loan. They're essentially saying goodbye to that debt. However, there's a catch. They are still on the hook for certain things related to environmental issues. So if there were any environmental problems with the property, they might still have to deal with those. This settlement also meant a quick move by the court. Just a few days after the stipulation was submitted, the court approved the appointment of a temporary receiver for the property. This shows how serious the situation was and the swift action taken to manage the property during this transition. Looking at the securities listed for the company, they have Class A common stock and Class A preferred stock purchase rights. The common stock is traded on the New York Stock Exchange under the symbol NYC. The preferred stock rights are also listed on the NYSE. The filing mentions common stock. When we look at the numbers, we see details related to common stock and rights, with quantities like 0.000001595527. These are likely the number of shares or units outstanding. The currency is noted as USD and the unit is shares. Similarly, for rights, we see the same numerical value and the unit is shares. These numbers represent the scale of the company's equity structure. The report is signed off by Michael Lasanto, who is the Chief Financial Officer, indicating the company's internal review and approval of this filing. The date of the signature is September 12, 2025. Now for my take on this. American Strategic Investment Co. is clearly navigating a difficult situation with this property financed by a substantial loan. By agreeing to the settlement and cooperating with the foreclosure process, they're choosing to cut their losses on this particular asset rather than engage in a prolonged and potentially more damaging legal battle. This strategy, while it means losing the property, also provides a clear path to resolving the debt associated with it. The key takeaway here is that the company is effectively restructuring its assets to manage its financial health. The settlement removes a significant over losses on this particular asset rather than engage in a prolonged and potentially more damaging legal battle. This strategy, while it means losing the property, also provides a clear path to resolving the debt associated with it. The key takeaway here is that the company is effectively restructuring its assets to manage its financial health. The settlement removes a significant overhang of debt and potential legal liabilities. However, the continuing responsibility for environmental matters suggests that even after the property... Alright, that's our breakdown of American Strategic Investment Co.'s latest filing. What's your take on these numbers and what they signal for the company's future? Do you think this settlement is a smart move? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more discussions and to connect with other curious minds. Thanks for watching. See you next time.